What if I told you that while everyone's fixated on the same few AI plays, a silent shift is happening across Wall Street? Top analysts are quietly repricing some of the most pivotal AI stocks, sending clear signals about who's poised for explosive growth and who might be hitting a wall. Almost nobody's talking about the nuances of these fresh ratings, but understanding them could give your portfolio an undeniable edge. If you skip ahead, you'll miss the key numbers that separate hype from true opportunity. We're diving deep into 8 key players you simply cannot afford to ignore. Let's dive in. First up is Elastic NV, ticker ESTC. Elastic NV, a pivotal player in search AI and cloud solutions, is making significant waves, even as TD Cowen analyst Andrew Sherman recently lowered its price target slightly to $85 from $90, maintaining a hold. This adjustment came pre-earnings, anticipating a conservative guide from its new CFO, despite an expected beat. And what a beat it was! Elastic shattered Q1 2026 earnings expectations with an EPS of 60 cents against a 17 cents forecast, following strong prior quarters. This consistent outperformance, coupled with raised full-year revenue outlooks and improved operating margins, highlights a company firing on all cylinders. Its aggressive pivot to generative AI is the core driver, positioning Elastic as essential plumbing for data retrieval and context engineering in AI applications. Strategic partnerships with AWS, Google Cloud, and NVIDIA are solidifying its market position. While Zacks recently downgraded it to hold from strong buy, Wall Street largely maintains a moderate buy consensus, with an average price target around $120, suggesting substantial upside as its AI innovations gain traction. Coming in at number 7, we have Intel Corporation, ticker INTC. Intel, the venerable chip maker, is in a critical turnaround, underscored by TD Cowen's Joshua Buchalter reiterating a hold with a $20 price target. This follows the U.S. government taking a stake through CHIPS Act funding, a positive political signal. Intel's Q2 2025 showed mixed results. Revenue beat, but generally accepted accounting principles. EPS of 0.67 missed due to significant restructuring and impairment charges. The company is aggressively cutting costs, including a 15% workforce reduction and optimized capital expenditures, to hit its $17 billion non-generally accepted accounting principles operating expense target for 2025. Financial bolstering through Mobileye monetization, Altera deal closure, and government funding provides crucial liquidity, though the government stake limits a full foundry spinoff. Strategically, Intel is pivoting its AI focus to edge, agentic AI, and AI-enabled consumer devices, launching products like Gaudi 3 and Core Ultra 200 volts. Intel Foundry Services is aiming for profitability by late 2027 and seeks to be the second-largest foundry by 2030, with the 18A manufacturing process being key. Despite current competitive challenges and some yield concerns, Intel's roadmap includes Panther Lake and Nova Lake processors leveraging 18A. The real gem is still a few picks away. Please stay with me. Our 6th stock is Snowflake Incorporated, ticker SNOW. Snowflake, the cloud data giant, continues to impress, with Citizens JMP analyst Joe Goodwin reaffirming a market outperform rating and a $260 price target ahead of its earnings. The bullish sentiment proved prescient as Snowflake delivered exceptional Q2 fiscal 2026 results. Revenue surged 31.8% year-over-year to $1.14 billion, and adjusted EPS hit $0.35, both comfortably beating estimates. This led to an upward revision of its full-year product revenue forecast. Its net revenue retention rate remains strong at 125 to 126%, indicating deep customer engagement, while remaining performance obligations jumped 33% to $6.9 billion. The company also authorized a $2.5 billion stock repurchase program. The acquisition of Crunchy Data and an expanded partnership with OpenAI underscore its commitment to making AI accessible within its secure data environment. Despite a temporary dip from CFO Mike Scarpelli's retirement, Wall Street largely maintains a strong buy consensus, signaling conviction in Snowflake's long-term growth, especially its ability to capture the burgeoning AI market. At number 5, we're looking at Advanced Micro Devices, Incorporated, ticker AMD. Advanced Micro Devices is rapidly cementing its position as a formidable challenger in the AI hardware race. Truist Securities analyst William Stein upgraded AMD to buy, with a price target of $213, up from $173, citing hyperscalers now seeing AMD as a genuine partner, not just an NVIDIA price check. AMD delivered a record $7.7 billion in Q2 2025 revenue, a 32% year-over-year jump, though a gross margin of 43% was impacted by an $800 million inventory charge due to China export controls. Crucially, its data center segment revenue climbed 14% to $3.2 billion, driven by EPYC processors gaining significant market share. AMD's AI accelerator sales exceeded $1 billion in Q2 2025, with CEO Lisa Su forecasting over $4.5 billion for fiscal year 2024. The company's aggressive AI roadmap includes the MI350 series and the Helios rack-scale solution with MI400 GPUs for 2026. Major hyperscalers testing AMD's accelerators signal strong support. While NVIDIA maintains a lead and Broadcom gains in custom AI silicon, AMD is carving out its niche. Analyst sentiment is moderate buy, but some adjustments reflect competitive pressures. We're moving toward the most explosive opportunities. Keep watching. Number 4 on our list is Apple Incorporated, ticker AAPL. Apple, the tech behemoth, recently faced a typical sell the news dip post its iPhone 17 event, yet Goldman Sachs analyst Michael Ng reiterated a buy rating with a $266 price target, highlighting encouraging factors like iPhone 17, form factor updates, potential Pro model price increases, and carrier promotions. The company reported strong fiscal Q3 2025 earnings, a record $94.0 billion revenue, up 10% year-over-year, and diluted EPS of $1.57, driven by double-digit growth in iPhone, Mac, and its services segment, which hit an all-time high of $27.4 billion. Apple's AI strategy is undergoing a pivotal overhaul, rebranding Siri as World Knowledge Answers, set for spring 2026, integrating large language models like Google's Gemini via its private cloud compute. Regulatory scrutiny continues, with a favorable U.S. antitrust ruling on Google search payments, but an ongoing DOJ lawsuit challenging App Store policies. Despite these short-term pressures, analysts maintain a positive to neutral buy consensus, confident in Apple's robust services growth, long-term AI roadmap, and unparalleled global ecosystem, suggesting the recent dip might be a buying opportunity. The closer we get to the last company, the more explosive the stats. Moving on to number 3, we have Broadcom Incorporated, ticker AVGO. Broadcom is surging ahead in the AI revolution, thanks to its custom chip offerings and networking prowess. Citigroup reiterated a buy rating with a $315 price target, bullish ahead of earnings, expecting sales to exceed $15.8 billion in Q3 and guidance for Q4 sales above $17 billion. Broadcom's fiscal Q3 2025 results were indeed impressive. Record revenue of $15.95 billion, a 22% year-over-year jump, and EPS of 1.69, both beating estimates. AI-related revenue alone surged 63% to $5.2 billion in Q3 2025, projected to hit $6.2 billion in Q4. A monumental $10 billion AI chip order, widely speculated to be from OpenAI, underscores Broadcom's growing role as a key alternative to NVIDIA for hyperscalers. CEO Hock Tan envisions AI revenue surpassing $120 billion by 2030. The VMware acquisition continues to bolster its infrastructure software segment, which saw a 17% revenue increase. Analysts maintain strong buy or buy ratings, with some price targets hitting $400, reflecting strong confidence. Broadcom's commitment to shareholder returns via dividends and a $10 billion share repurchase program further solidifies its appeal. Our second AI stock is NVIDIA Corporation, ticker NVDA. NVIDIA continues to dominate the AI landscape as CFRA reiterated a buy and raised its price target, anticipating another stellar earnings report. This bullish outlook is well-founded. NVIDIA reported record Q3 FY 2025 revenue of $35.1 billion, a staggering 94% year-over-year increase, driven by its data center segment surging 112% to $30.8 billion. Its EPS more than doubled to $0.78, NVIDIA commands an estimated 80 to 90% share of the enterprise AI chip market, thanks to its powerful GPUs and the ubiquitous CUDA software ecosystem. Recent innovations include Blackwell architecture-based GeForce RTX 50 series GPUs, marking a significant push into consumer AI, and aggressive expansion into physical AI, with Project Digits and the Omniverse platform. However, the competitive heat is rising. AMD, Intel, and increasingly, hyperscale cloud providers like Broadcom, Google, AWS, and Microsoft are developing custom AI accelerators. This could challenge NVIDIA's long-term market share and pricing power. Despite these threats and Blackwell production complexities, analyst sentiment remains strong buy, with significant upside. NVIDIA's continued innovation, massive buyback program, and overwhelming demand make it impossible to ignore. And finally, at number 1, we have Meta Platforms, Inc., ticker META. Meta Platforms, Inc. stands out as the ultimate consumer AI play, according to Bernstein analyst Mark Shmulik, who maintains an outperform rating and a $900 price target. The firm is bullish on Meta's robust AI efforts, believing its core AI investments are paying off with real results. In Q2 2025, Meta delivered a stunning 22% year-over-year revenue increase to $47.52 billion and EPS of 7.14, both crushing estimates. This growth is fueled by advanced AI tools like the Andromeda recommendation engine, which enhances ad targeting and user engagement across Facebook, Instagram, and WhatsApp. Meta projects Q3 2025 revenue between $47.5 billion and $50.5 billion, signaling continued momentum. The company is pouring massive capital expenditure, $66 to $72 billion for 2025, into AI infrastructure and talent for personal superintelligence. Regulatory hurdles persist, particularly in the EU regarding GDPR and DMA compliance. Yet, Meta recently won a legal challenge against the EU on supervisory fees. Analyst sentiment remains strong buy, with an average price target around $816 to $822, reflecting confidence in Meta's AI-driven growth and profitability. Now, let's quickly dive into the raw numbers for these AI giants. What immediately jumps out is the sheer scale, particularly with market capitalization. NVIDIA tops the list with an astronomical $4.2 trillion, followed closely by Apple at $3.5 trillion and Broadcom at a staggering $1.6 trillion. This is where the big money is betting on AI. On the other end, Elastic NV and Intel, with market caps of $10 billion and $107 billion respectively, represent earlier stage or turnaround plays, potentially offering higher growth leverage if their strategies pay off. When we look at annual revenue, a similar hierarchy emerges. Apple leads with an astounding $391 billion, with Meta Platforms at $165 billion and NVIDIA at $130 billion, showcasing their immense commercial reach. Even Intel, despite its struggles, pulls in $53 billion, underscoring its foundational role. Companies like Elastic NV and Snowflake, with revenues of $1 billion and $4 billion, are still in a growth phase, but their impressive gross margins hint at future profitability. Speaking of gross margin, this is where things get really interesting. Meta Platforms takes the crown with an exceptional 81.95%, demonstrating its incredible efficiency in monetizing its user base. NVIDIA also shines brightly at 69.85%, reflecting its premium hardware. Elastic NV at 75.19% and Snowflake at 65.45% are also remarkably profitable per dollar of sales, which is a powerful indicator of their competitive moats. Intel's 29.76% and AMD's 43.20% are more typical for hardware manufacturers, but show areas for improvement compared to the software-driven models. Finally, let's talk about earnings per share. Meta Platforms leads by a mile, with an EPS of $27.61, a testament to its operational leverage and AI-driven ad performance. Apple and NVIDIA also deliver strong positive EPS at $6.58 and $3.51 respectively. However, we see some notable negatives. Elastic, Intel, and Snowflake are all currently reporting negative EPS. This isn't necessarily a red flag for growth companies, as it often reflects aggressive reinvestment into R&D and market expansion, especially in the AI space. But it's a critical factor for investors focused on immediate profitability versus long-term growth potential. So these are 8 AI stocks, each with latest analyst ratings and compelling narratives shaping their future. Which of these AI giants do you believe has the strongest long-term potential, and why? Drop your insights and predictions in the comments below. And here are 7 best semiconductor stocks to buy now. Click here to watch now.